Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my good friend, Gary Wagner, the editor of goldforecast.com. Welcome back, sir.
It is great to be here and Happy New Year.
Yeah, Happy New Year to you and everyone watching. I wanted to get you back on to talk about everything that's going on in the silver and gold market, what's going on with Powell, and he's been talking about rate cuts. Do you believe him? Do you not? What's your opinions, Gary?
In terms of the Fed, if you've listened to what Powell's press conference has been throughout all of last year, up until December, they didn't mention a rate cut at all. They said, well, it's not on the table. We're not discussing it, even though the minutes would show that they were.
Hmm.
But this time he came out and had to go over what's called the SEP, which is a summary of economic projections, which contains the most recent dot plot. And what the dot plot is, all of the members vote on what they think will happen to inflation and interest in 2024, 25, and 26.
Hmm.
And they're laying out a steady decline in Fed funds rates. It's sitting now at 5 to 5.5. If they reduce it this year by 3/4 of a point, that's going to take it lower, and they're going to ratchet it down year after year after year for the next 3 years till they get to what they believe is normalized rates. And normalized rates for them, I believe, is a little bit above 2%. It used to be 2. Their inflation target is 2%, but I think that maybe 2.5, 3% is where we'll end up a few years from now.
And what do you see happening to the silver and gold market? Like I've been talking about this for about a week or two now. Like let's say the same things repeat now that happened in the 70s, where they cut rates, they cut it too early, inflation starts going back up. Where do you see gold and silver going then? And do you see maybe some banks, like some smaller regional banks going under because of all this uncertainty? What's your thoughts?
Well, I not privileged to what's going on in the banks, but I will tell you this. First of all, if inflation does begin to ratchet up, that would be create bullish undertones for gold and silver.
Hmm.
But what I've noticed the most is the decoupling of the relationship between gold and silver. We had gold go down, it was down about 15, I think it closed down about 12, but silver was in essence unchanged. I think it was unchanged and down a nickel. And so it has been holding up much better as gold has been going down. Gold seems to be much more sensitive to inflation, geopolitical concerns, where silver has that beautiful industrial aspect. So today, when we saw the Nasdaq go up substantially, the tech sector is really leading the way in the S&P. We saw silver hold up much better.
Right.
And to me, the key with silver is going to be industrial demand, because besides it being accumulated by investors, it's widely used throughout industry. So that's something that we always want to be aware of.
Absolutely. And the increase of the green revolution coming, Gary, you see that I'm sure in the next 10 to 15 years, as the applications start to ramp up for silver, they start finding more use for it. You'll start to see that. Is it 800 million ounces a year they mine for silver, or I think it's 825 million a year. But
Okay.
sooner or later, you're going to get that's all going to be gone.
Well, I don't know what the consumption is by industry, but I can tell you that the consumption will go up
Right.
undoubtedly over the next 3, 5, and then 10 years. The green revolution will have a lot to do with it. I know that silver is heavily used in the creation of solar panels,
Hmm.
but it's also used in all of the tech companies, although copper is a primary one. Silver is widely used in all of the high tech companies in terms of building their hardware. So what we've seen in the equities markets in terms of the gains this year, which is short term, but last year, especially last quarter, was the overwhelming response to AI and how that's ramped up productions of the GPUs, or the video cards, and all of the applications that those are using. Elon Musk built a thing called the Dojo, which is a very sophisticated series of CPUs. All of that requires some component of silver in it.
So I just wanted to let everyone know about our new sponsor, Strategic Wealth Preservation. They are an international precious metals dealer and they are a secured storage provider that have headquarters in the Cayman Islands. The company owns and operates a large Class 3 UL rated vault in the Grand Caymans, and they offer other strategic locations as part of its global storage network. They specialize in the acquisition, secure storage, and liquidation of precious metals for individuals, companies, trusts, and wealth management professionals on behalf of their clients. So if you guys want to check them out, the link is in the description below. And I'm looking lately at all the statistics with everything that's happening on the other side of like real estate. When interest rates are going down, a lot of people are saying that housing prices will also go down as well as in 2024 they're going to reduce rates. Do you see a possibility of a bubble popping for the real estate sector, Gary?
Well, that's what the analysts are saying, and the analysts that have really divin, uh, really gone deep into the minutia of the information itself. In Hawaii, we're not really seeing it as much. It's a state by state here on the mainland, really. But that's what they've been saying. The thing is it's obvious when you've got mortgages that were up at 8, now they're 6.5 to 7. But when you compare a 7% mortgage to a 3% mortgage, it takes a lot of the buying pool out. They
Right.
just can't qualify for the property. They have one. And I think we talked about this a little bit last year. Secondly, those that are sitting on fixed mortgage rates of 3%, whereas they might have wanted to move to something that suits them better, whether or not they're older and their kids are moving out, so they need something smaller, or their family's growing, they want something bigger. People are reluctant when they've got a fixed rate that's so low to double that rate
Right.
by moving. So there's less incentive there. And so that's really what we're seeing. And that will cause a dramatic effect in the housing market. How much, I don't venture to say because it's not my expertise, but it's obvious that higher mortgage interest rates will really curtail demand. And that's what the Fed wanted to do in the first place, because to get inflation down, you have to reduce spending. So, how did they reduce spending? They make the cost of borrowing go up substantially. And the most sensitive to that was mortgages.
And you sent me some charts here before we started recording on
Hmm.
silver, which I'm going to share right now. The one I have up is just the
A
silver
standard
futures. Yeah,
candlestick.
just the standard silver one. What are we seeing right here?
Well, when I look at this, I've got a basic Fibonacci retracement. It begins at around $20.86 up to approximately 26.35.
Hmm.
And that was the range from October through December. And so what we're looking to do is, after it hit its top at the beginning of December, it started coming down. We
Right.
wanted to see what level it might find support. And if you look at what happened around the middle of December, it hit lows just below the 61.8, which comes in at $23, a little bit below there.
Right.
But in a candlestick, what it is you got a tail, exactly. Um, but the real bodies maintained the price point above that. And that to me is showing that that is a level of technical support. And then, of course, we had a small blip up. It went to about 24.50. It came
Yeah.
back down to that area. And this is current pricing, the beginning of 2024. And once again, we saw that there was good demand. It seemed as though silver was being bought up at those prices.
Yeah, absolutely. And the second chart that you sent me, this one is explaining what exactly?
This is what's called a Henkin Ashi, or a Japanese moving average chart. And I really like it because it reduces the noise. You can see solid green on an uptrend, solid red on a downtrend.
Hmm.
You look for two things. If I draw your attention to about the center of the chart, that cross that came in December, and then when it sold off, you look at the size of the bodies, and they're rather large.
Yeah, yeah, I can
And
tell.
as we came down to that 61% retracement or $23, the body size reduces till we get what's called a pivot candle.
Hmm.
On a Henkinashi, on red candles, you don't want to see upper wicks because the difference between a candlestick chart and a moving average chart is how they fix the open.
Right.
On a candlestick chart and a bar chart, the open is the true open. On a Henkin Ashi, they fix the open as the midpoint of the prior candle, and that's how it averages itself out. So what you get is recent action at the beginning of this week and the end of last week, meaning the beginning of the year, we saw the sizes really begin to reduce. And that tells me that we could be at a tentative short-term bottom. The space of time I'm looking at is only a couple of months, so we're only looking to go out another couple of months. But it tells me that 23 should hold in
Hmm.
terms of silver right in this area right now.
Yeah, right
We
at
have
the
two
23 mark.
areas of resistance, 2450, and then the big one comes in at 2650. And I think that if we get the precious metals running throughout the year, that's the first point I really want to see silver break through
That
before
26 mark?
26, absolutely, because
Mm.
if it's going to go to 30, and that's what I believe is most likely if we get a run in the metals, it's got to break through 26 first.
Absolutely. And in a world where you see people starting to adapt like a lot of digital currency in China, you see it being even in the United States. I know at Whole Foods, the one owned by Amazon, you can scan your hand and you can pay
Right.
just by hand. So, as we're moving towards that, how important is it, Gary, to have gold and silver?
That's an interesting question. I mean, as far as digital currency goes, whatever form it ends up being the most accepted form, whether it's a government or a Bitcoin or Ethereum, to me, it's not if, but when.
Right.
Um, there'll be a point in time. I mean, listen, there was a point in time when there wasn't currency and they bartered, my cow for two goats or whatever.
Hmm.
Then currency became accepted. And then it lasts, that was a really a long run when you consider, well over 1,000 years. There will come a point when paper currencies are collected like stamps or something, but they're not really have any beneficial use. You can't transact business, you can't pay your taxes, it's all going to be digital. It's become digital over the last 5 years in what they call in banking ACH and SWIFT, where everything is moved back and forth between the banks. So it has been in a form of digital, but to go and to abolish all of hard currency, I think it's a matter of if and not when. And that could be anywhere from a couple of years to 5 years or 10 years. I don't know what
Right.
that timeline is going to be, but I think it'll be sooner than later,
Uh,
personally. Now, what will digital currency do to gold and silver? Well, gold and silver have always been a hard asset with intrinsic value. That's not going to change. If anything, we have fiat currency now. Digital is no different than fiat currency. It's not really backed by anything. The key with digital currency is the controlling of the bookkeeping. It's decentralized, so
right.
nobody can kind of own that. Um, but gold is gold, silver is silver, and I believe they always will be. There'll always be a not a need but a desire to hold assets in terms of hard currency, because the other hard asset is real estate. It's not very liquid. You can't move it around with you.
Yeah, it's
It's not
true.
it's not something you can do something with, but it's always something that will have value. um, Stocks over time all have been moving up. Well, everything's been moving up over time simply because the buying power of the dollar has been declining. So it has nowhere to go but up. But there's always going to be a reason to hold hard assets. And when you think about it, why has the central banks been scurrying to buy more gold than
Yeah.
ever before? I mean, last year was a landmark year. there's a reason that they're buying hard assets. It's not like they know something our investors don't know. They know exactly what we believe,
Well,
which is that
they know money's not real.
they know,
They
yeah,
make it.
exactly.
They make the money. They're like, here, you guys take this stuff. We'll buy this
That's
gold.
right. And
Uh,
any day of the week, they'd love you to turn in your gold and exchange it for currency, but
yeah,
that's not a thing anymore. Most people don't do that.
that's true. Thank goodness. Well, Gary, I want to thank you so much for coming down to Wall Street Silver. Where can people connect with you? And yeah, where can they get you?
The goldforecast.com, of course, is our website. We have a YouTube channel, The Gold Forecast. And then I do all of my Twitter. It's called X, but no one's really captured that term. But it's at Gary S. Wagner. And those are the three primary ways I try to disseminate information.
Awesome. Well, I appreciate you so much, Gary. And hopefully in the future, as we're watching everything really closely, as always, we'd love to have you back.
We'll touch base down the road and see what else is going to happen this year.
Awesome. Take care, everyone.